Welcome back to Uncontested Investing. Today we are delighted to have Matt Reilly, a seasoned expert in the real estate and finance industries. Starting as a certified real estate appraiser in New York, Matt transitioned into managing non-performing loans and REOs, amassing over $1.5 billion in transactions as VP at Empire Mortgage. Now with Stonecrest Financial, he continues to specialize in private lending and bridge loans. Let's hear more about his extensive career and expertise. Matt, thank you so much for joining us on this week's episode of Uncontested Investing. Pleasure to have you. You got here a little early, so we got our sports podcast out of the way. Now we can do our real estate conversation. And, where I want to start with you is the degree in architecture from the New York Institute of Technology, not far from where we are located today in the studio. So can you talk about that? Is that where your initial interest in real estate sparked, or was it something even earlier than that?
I think my initial interest in real estate, I was always interested in the design of buildings. My father was a surveyor, so I had been with him on some construction sites. So I was kind of intrigued by the way they were put together and how they were built, so I got into architecture. But my real love of real estate came while I was in my third year. I started working as an assistant with a real estate appraiser on Long Island, and to help him out to read blueprints and plans because they were doing a lot of construction in the mid-'80s. And I as an appraiser, I liked the valuation end of it. I liked doing it. It seemed a lot more interesting than drafting. And then after I graduated, I just went to work for an appraiser.
Yeah, it's a little bit removed from where you are now. So we'll get into, as you're the head of acquisitions and business development at Stonecrest Financial now, but you did mention you started as an appraiser. How valuable do you think that experience was for you to kind of see a different angle of real estate investing from where you are now? Do you remember that, and how beneficial that was for you to get that initial foot in the door?
Yeah, definitely. I felt like it gave me a real good ground floor. The first company I started working with on this end of the business, that's what I was doing for them, was doing their valuations. And I felt like, just because I did also residential real estate, I did commercial real estate, I was a licensed appraiser, I'd done expert testimony. So I felt like I had a real solid background in just evaluating the property. And I think that's one of the most important parts of evaluating any deal, is getting the value of the real estate correct.
So taking that another step farther, when you're talking about the appraisals and now what your role is today, negotiation and pricing are two skills that you pride yourself on. Can you talk about how you develop those skills, how important they are, what your mindset is going into a negotiation?
So I always try to look at a deal from all angles. That's kind of like my mindset. I think in order to negotiate well, you have to be a good listener. So you always want to hear what the other side is saying and formulate your opinion. I think like I said, I think the value has been key to a lot of the deals that we have done. So obviously having not only expertise in evaluation, but also, having data, facts. We employ other companies to help us out with valuations, just besides appraisers and realtors. Mm-hmm. So I think, having the data when you go into negotiation helps your mindset, because you feel confident. Exactly. And when you have a confidence in a certain aspect of it, you can say like, yeah, I hear what you're saying, but if you look at the data, and that always has been key. And I think my background has given me that confidence to negotiate from a point of strength.
Yep. Yeah, and that familiar phrase, fake it till you make it, comes to mind, but I don't think that's an occasion where you can quite do that when you're talking about negotiation and financing and, crossing the T's, dotting the I's. That's something where, like you said, you really have to sink your teeth into the data and be able to come to that table with the confidence of, no, I've actually done the research, so I know I have confidence in what I'm telling you. Not like, oh, okay, I guess this is going to work for this deal. Let's see what happens on the next one type of thing.
Correct. And I think, like you said, yeah, people know. It's like, and when you've been in the business long enough, you hear people say things that you just say to yourself, yeah, that doesn't make sense. Mm-hmm. And it kind of makes everything else they say seem a little bit suspect.
Exactly.
So, like you said, I think the confidence in knowing what you're talking about definitely helps.
Yeah, and people, that lends itself to that repeat business, right? When mm-hmm. somebody's done the due diligence, done the research, and they're giving factual answers backed by, the research that they've done, it just kind of parlays itself into more success down the road. Now, you made a shift from an appraiser to working with non-performing loans, REOs, At what point in your career did you know it was time for a shift? Did you have confidence in that? What was that stage like when you first made that initial switch within the industry?
So I was an appraiser for about 10 years, and after the kind of savings and loan crisis, they started the RTC to sell non-performing loans and other assets. Kind of got a random call from a guy named Charles Lott at Eastern Savings Bank, and he wanted to look at properties on Long Island like from dusk to dawn because they were, buying some of the non-performing notes. And, spending those days in the car with him, kind of him telling me about the business and looking at these properties and realizing that not only were you buying the notes, which were past due, which were at generally under the value of the property, you were also getting a discount to the balance of the loan. So I was like, this is like a great business. This is a great way to invest in properties. We got along well. We hit it off, and when he started his own company, I went to work for him. So
that's awesome. That's a good story there. So then you moved into transitioning, managing funds of over $1.5 billion worth of notes. That's got to be some pressure, right? There's a little bit of that, when you're first starting out, it's the nickel and dimes of it all. It's the smaller deals, the 100,000s, the 300,000s. When you talk about working in the billions of dollars, did that come with a lot of pressure? Did you feel prepared for that, or?
It does, because you put together a certain process. And, by then, when I was working at Empire Mortgage, we had put together our processes. We had a certain system. We had good people working there. And we were able to, whether the deal was a small deal or a large deal, you still go through the same process. So it's like, okay, I do this. I get my valuations. I evaluate it this way. I look at this, and then it's just on a larger scale. So the numbers really don't overwhelm you. I think also that was over about a 10-year period.
Okay.
So it's not like I did a deal for $1 billion. I think the largest deal I think we ever took down was, I think at cost, was about 37 million. So
yeah,
but when you're doing multiple deals a month, and maybe you're buying 40-50 million a month, and you're selling 30-40 million a month, it adds up.
Yeah, that experience too just kind of piles on top of each other, and you get more comfortable as you go. So I think we're off to a great start. We just talked about managing over $1 billion. It's a perfect segue to the Money Making Minute. Our sponsors are going to jump in really quick with an ad read here, and we'll be back with that first segment. Thank you so much, Matt. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insights and knowledge from industry leaders and gain valuable regional market insights, ensuring you always have the best information right at your fingertips. Visit REIInc.com to elevate your real estate investment game today. Welcome back to this week's episode of Uncontested Investing. I'm joined by Head of Acquisitions and Business Development, Matt Reilly from Stonecrest. Matt, thank you so much for joining us. I'm going to put you on the spot for the first time today, though, and we're going to do the Money Making Minute.
Okay.
So this is a segment where we're talking to our listeners, letting them know any piece of advice that we can share with them to help them be successful. It's anything from an investment strategy, maybe an app you use to track organization production, skill, habit, whatever way you want to convey what makes you successful that our listeners can take with them in 2024 and beyond. The Money Making Minute, go ahead.
I would say pay attention to details. Details are important. There are no shortcuts. Due diligence is key to most deals. You want to know as much as you can about any property or deal. Don't let something slide and just think that'll be okay. And as far as valuations go, there are certain apps you can use, but seeing a property, really looking at it, talking to even some of the people that maybe did the valuations, there's no shortcuts. You want to know as much as you can about the property. I always say it's due diligence, due diligence, due diligence, and pay attention to the details. They don't lie.
So when you talk about the details regarding that, is there a specific space that the investor can start at? Is it kind of making sure that you go through every line? Are there certain pinpoints or checkpoints that they can kind of cross off their list? How does that detailed approach work for you? Is it really just going over everything, or is it a few key points?
I would say it's a few key points. Like I said, you want to look at all the details. You have a certain process in place. Like when you're looking at valuations, You're reading a report, maybe you haven't seen the property, but you can look at the picture, then read the report, see if what your eyes are telling you match what the words are telling you. That's, it's kind of one of those things, you start reading something and you're like, yeah, that doesn't quite look right. And I don't, maybe I'm missing something here. Don't ever underestimate things like, well, he said it must be right. It's like just, you always have a little bit of skepticism in there. Maybe that's my New York upbringing. Sometimes you're just a little skeptical, but
got to double check yourself.
Exactly.
Yeah. Okay, cool. So I want to move to your position now with Stonecrest Financial. You have some longevity and some expertise in this industry, but they're a company that's been around since 1986. So if you can kind of talk about your experience with the company, what they do well, what's allowed a company like that to stay in business for so long? Because in a volatile industry like real estate, you don't always see companies that get to hang around for 30, 40, 50 years.
That's true. I think a lot of that credit goes to John Freeman. He's the founder. He's taught me a lot. I think one of the important things as part of our culture is, we want to do better, be better. It's all about learning. I think that was one of the main things that he brought to me was that, hey, you always want to keep learning, evolving. There are companies like shooting stars. They can shoot up and, they're reaching for that rainbow and they're doing what everybody else is doing on the treadmill. And it seems like things are going great. And like you said, it can crash and burn. So I think, you want to be consistent. That's a big part of it. You always want to be evolving and look into the future. I mean, nobody can tell the future, but you can see certain signs when things are about to change and you want to be prepared.
Yep. So you've mentioned two names now throughout the interview. You got Charles Lott and John Freeman.
Correct.
I love talking at least once an episode about networking, mentoring. How important is that to you in the industry? And, if those two guys kind of served as mentors, how important has that relationship been? Do you mentor anybody? Do you coach anybody? Just kind of talking about the networking and mentoring and how key that is in this industry.
So I think networking is important. Obviously, meeting people, being comfortable with them when you do deals with them. If you know the person, sometimes you feel a little more comfortable getting something done, or you can kind of talk to them a little bit more plainly. So I think, the networking is important. So I go to conferences, we take trips to, to visit people for those reasons. As far as mentoring goes, I've had a couple good mentors. It taught me a lot. I've talked to some people. It's not like not any one particular person I've taken under my wing, but I feel like I try to share my knowledge when I can. If anybody asks me, and that's it's what I kind of feel like that's my kind of like move passing it along.
Yeah, the pay it forward.
Pay it forward.
Nice,
correct.
Nice. More specifically within your role, when you're talking about acquiring a new property, looking at something for Stonecrest, is there anything in particular that makes it a sound investment for you? I know we've talked about due diligence a lot, and maybe there's a checklist there. Are there certain things investors should be looking at right away when they're wondering if this is right for them?
Yeah, I think you have to know your own self and what you're comfortable with. Whether you're working for a company or you're investing for your own book. Generally, I think most people start just like I did. You invest in a property that's local. Somebody's selling it. It's maybe a little bit of a distressed situation. You think you're getting a good deal on it, and that's how you kind of get involved. But I think the one thing we'll look at almost any deal. Pricing is a big part of it. It's hard to get away from that. You can't say, well, because some properties aren't worth it almost no matter what the price is. But so there's an important part to the pricing. But that's one of the key elements. That's what we look at. What's the story? We try to get into it. We try to listen. We hear what do they want to get out of it? Can we be creative and make a deal there that's win-win for them and us? So we're always looking at things a little bit differently.
Now, I've been in the industry for almost 4 years now, so I'm not sure if this is a new phrase or something that's been used for a long time and I'm just kind of catching up, but it seems like a lot of people are moving towards creative financing as one of the buzzwords that attracts people when they're talking about working with a lender instead of a bank, trying to grow their portfolio. Two of the ways that you offer creative financing at Stonecrest would be the bridge loans and then the lines of credit. Can you kind of expand on those? Maybe if investors out there aren't familiar with those terms, should they be using bridge loans and lines of credit? How can they take advantage of them essentially?
So they're a key part for a lot of people, especially they serve a purpose. I think in today's private money lending, the bridge loans that we offer are good for not just investors. They're also good for people that are just looking to move from one house to another. We have what we call like a swinging equity loan, where we can actually lend you the money to purchase the new house before you actually sell your existing house. They're short-term in nature, and it gives people the comfort of purchasing a new house without the stress of selling their house, and they're under that time gun where everything, in the old days, you used to sell your house and buy another one, and, there was a close over here, and then they had to go to another close, and everything was very stressful. So that takes, if you have the wherewithal, and it's an element that works for you, it's a very good product.
That is very cool. That I would assume that opens up a lot of doors, and you're changing people's lives at that point, because as you mentioned, there's a lot of stress that goes into that, and you have to literally line that up perfectly back in the day when you're talking about selling a house and moving into the other one, right? That always seemed like such a hard thing for me when I was growing up, of like, how do people move, like, right? That's got to be such a tough process of the timing of it all, of, you're taking all these boxes out of your old house and going right to your new one. So very cool there. We're going to take another quick break, though. We've got Deal Breaker, Deal Maker coming up next, so stick around. Our listeners, this will be a good one. Thank you very much, Matt. At RCN Capital, we know that time is money. With our competitive rates and quick turnaround time, you can receive funding in as little as 10 days. We offer flexible payment plans to relieve the pressure of the repayment process. Our team is experienced in making sure that you choose a loan that will suit you best. So get on the phone with a loan officer today by emailing info@rcncapital.com or clicking the link in our bio. Welcome back to this week's episode of Uncontested Investing. Joined again by Matt Reilly from Stonecrest Financial. Matt, thank you so much. The insight and the conversation has been great so far.
Sure.
We're up on segment number 2, Deal Breaker, Deal Maker. Okay. So this is going to be using your experience in the industry. What causes deals to break down? What do all successful deals have in common? I think this is a great segment for our listeners to really wrap their head around, things they should be avoiding, pitfalls they should be avoiding, to make sure that when they enter a deal, that deal closes and it's successful for all parties involved. So Deal Breaker, Deal Maker, take it away.
Okay. I think timing is one of the most important things. I think you have to set up realistic expectations. So every time I hear that phrase, I always think of, time kills all deals. If a deal lingers on too long, it always seems to collapse. So I think when you're getting into a deal, you want to always set realistic expectations, and then you want to stick to the timeline. And if there's any, variance from that, or something needs to be a little bit longer, then you need to communicate that well. So communications are important, but like I said, I think timing is one of the most important things when it comes to a deal getting done. It can be the deal maker, and it can be the deal breaker.
That was a good one. I like the way you ended that. I'm going to have to start getting every guest to do that, the deal breaker and the deal maker. Ended on a nice little cliffhanger. So when you're talking about timing, though, is that different for every deal? Are there specific thresholds that you want to see hit? I know everybody's out there advertising, we can close in 10 days, we can close in 5 days. Some of those processes might seem a little bit rushed, though. Are there timing benchmarks that you've set in stone throughout your course of working in the industry, or is it kind of working with specific investors, I guess, and finding out what works better for them?
I think it's, obviously all deals, like I said, they take different amounts of time. Yeah. So you have to be a little bit flexible, whether we're doing the financing or we're actually doing the purchasing. So you want to be a little flexible. But the important thing is the realistic, timelines that are set, and the communication. So if somebody needs to close in 10 days and you can do it, well, before you say yes, you should really make sure you do it. And then you have to set the expectations. Hey, I'm going to need this, immediately, and I'm going to need this in 2 days. And if you can get me this in 72 hours, then I can get this deal closed on this day. And then, you have to stick to those timelines. Otherwise, you could say, oh, yeah, I'm going to close in 10 days. And then, either whether you're purchasing a deal or you're financing it, and the information doesn't come in and you can't do it. And then they say, well, you told me you could close. Yeah. And there's that, that's why I said communications is important as well.
And that makes a lot of sense. And it's setting those expectations of what the timeline is, right? So correct. We can close in 2 months if you want, and you can take your sweet old time getting me every document we need, or we can close this thing in a week, but I need this document by 12:30 on Monday. I need this before the bank closes on Friday. So I guess, yeah, it's not a one size fits all, but you really need to take that into every deal of that timing and communication. So with the longevity, you've definitely had some experience in this industry. You've seen it from different angles. Are there any specific tenants? I know we've kind of talked about a few different things here that could be applicable for this answer. But if somebody were to come to you and say, Matt, I'm thinking about investing in real estate, what does that conversation sound like from your perspective when somebody's maybe on the fence about getting involved? What advice is your go-to for them?
So, that's a funny question. So for the longest time, I used to tell people there was a movie out there called Pacific Heights. And I think it has Melody Griffin and Matthew Modine, a few people in it. And I used to say, okay, go watch that movie. And then if that's something you can stomach, then you're ready to own real estate. But that's just a funny answer. But I used to really tell people
that's
that.
That's awesome.
Yeah. But I think as far as wanting to own real estate, you always want to know it is a commitment. There's time constraints and there's, depending on how hands-on, hands-off you're going to be. Whether you're going to have it managed, whether you're going to manage it yourself. In the beginning, a lot of people manage their own real estate like they do now with Airbnbs or they do with rental properties. So, you got to be prepared for those phone calls. And, if that's something that it's not your lifestyle or you're not interested in, then it's not for you. You can do other ways you can invest in real estate. But if you really want to own it and you want to manage it, then you got to be prepared.
Yeah. You've got there's a certain expectation when you enter this field of, picking up the phone call, being available. A lot of people get into this and they start it as their second job, and then slowly but surely it takes over. And, if they do it the right way, then they can quit their day job and be an investor full time. I feel like that's the plan, but everybody kind of starts out like, okay, let me get my feet wet. Let me try it. And then they're like, oh boy, this is going to need all of my time and attention. And that's when they're either all in or they kind of take that step back and be like, it wasn't for me.
Right, wasn't for me. Correct.
Yeah. So within the real estate industry, as you've mentioned, there's always advice that you hear from everybody when you first join. We've talked about giving advice to the younger generation. What advice would you give to yourself when you first started? What would you have liked to hear when you took that first job as an appraiser back in the day? What would that message be to your younger self?
I think that's a great question. And I think, one of the aspects, you get into the grind and you're working hard and you're kind of like on the treadmill. But one of the things I would like to tell myself back then was like, be patient. And Warren Buffett had a pretty interesting, I was watching one of his interviews and he gave a pretty interesting point. There's always those adages about, like I said, real estate always goes up. You can never lose money taking a profit. But he said, most people sell their stocks too soon. He said they buy a stock for all these reasons. It goes up 20%. They sell it. They take their profit. He said maybe they reinvest most of it. Maybe they spend some of it. It's kind of like the same thing in real estate. I wish I had that first property that I bought back in like 1988 in Huntington, New York. I wish I had that today. Like, it would be worth over $500,000 more. And I think if you can be patient and you can really look at the long picture, and say to yourself, okay, yes, I want to do some deals where you want to make money, you want to build capital, but you have to put aside a certain part of your investing self to say, okay, I'm gonna look at the longer term, play on this, and I'm gonna be more patient, and I'm gonna see where the market goes.
I think that's great advice as well, because there is a short game to real estate where you can get in and out of a property, but there's a long game as well, and you even said it with some of those adages, right? The appreciation value. There's always that rainy day fund, right? You can keep it in your piggy bank or in your back pocket and save it for later. There's certainly properties that fit that mold like you're talking about.
Correct.
So going back with being within the private lending sector for you, it's been over 10 years now at this point. I think you're at a point where you've seen some trends, you've seen the market dip, you've seen it at maybe some of its most successful periods. There's got to be trends that follow that economic change. What are you seeing from trends that are successful right now? Are there anything that Stonecrest is really zoning in on that's going to be successful for the next couple of years? What's the next trend?
Well, like I said before, predicting the future is always hard. I mean, you always want to be constantly evolving and evaluating things. Right now, interest rates are a little bit higher than they have been over the last several years, but historically they're not at, absorbently high numbers. Talk to anybody that bought a house in the 80s or even the 90s, and they're like, these interest rates are still pretty low. So I think as far as like what works, you have to kind of look at the market and see where it's going. Are there any economic changes? Like, you can go all the way back to Detroit in the, in the 60s and the 70s, and it was one of the 4 most expensive cities in the United States. And then with the, oil embargo and the price of gas going up, and suddenly all these cars weren't being built, and it changed. And so you've got to look for the larger trends, but you also want to look for, local trends. And I think just paying attention to what's going on in the marketplace and evolving will keep you up to date on what's going on. There are no steadfast rules. Like real estate always goes up. It's like you can never take a loss. If you sell at a profit, you can never lose money. It's like, those are things that those steadfast rules you can't buy into any of them. You always got to be evaluated.
So for you specifically, you've accomplished a lot in the real estate industry. How do you see your role evolving at Stonecrest, if at all? What's next for you from a goals perspective, whether it's you personally or the company and your role within it?
I think next for me, we had purchased a lot of REOs and non-performing loans over the last decade. Obviously, in the last few years, prices have been higher for those assets, and we've really taken a step back from that. So lately, I've been working on more of a secondary market thing and selling some of the bridge loans to investors and other companies. So, my role is a little more. I'm not in the office every day. I work from my house, so it's a little different. But from that standpoint, I feel comfortable in what I'm doing, and I like where I'm at.
There we go. So speaking of that, the working from home life has got to be pretty nice. It has its perks, but there's also things, I always ask people, is there something that they're passionate about outside of the real estate industry? What helps them refresh, recharge, make them better? Because as someone like yourself who spent the first few years grinding, filling different roles, seeing both sides or different angles from the real estate investment space, you're someone that can speak to this industry can drain you if you let it. So is there anything that you can point to that helped you throughout your career, or maybe something that you're involved in now that helps you be better at Stonecrest?
So a couple of things on that. One, I've always felt in pretty much my entire life that, getting away and taking a vacation with the family is good downtime. Like, you really need to disconnect. And, back in the 80s and 90s, it was a little bit easier to disconnect because your computer and your phone didn't follow you everywhere with every little bit of information. But you need to get away and disconnect. I think that's important, to recharge yourself and refresh yourself. I think the other thing too that we do as a company, which helps out, we have like I was talking before, like with John Freeman, we do a lot of learning. We do so we do retreats. We bring in people to help us, not only on ourselves, but help us on like business aspects, negotiations, different things. So it's like I said, always learning and evolving. That's it's a different type of work, so it's interesting, and it keeps you like refreshed and recharged. It's like the people that go to the Tony Robbins seminars. They come back and they're gung ho and they're ready to go. It's like there's different strokes for different folks. Everybody's a little bit different, but there's different ways to refresh yourself and recharge. But that self healing and downtime is important.
Yeah, and it's got, at a certain point too, it's almost like you're working different muscles of your brain. So the real estate is certainly focused and driven, but it's kind of refreshing in a way. Even like you said, even if you're still somewhat doing work, it's a little bit of a different outlet or avenue. So it is still kind of something that you're bettering yourself, and definitely lets your real estate brain take a little bit of a back seat for a while.
Correct. Right. It's more personal, more, like you're working on yourself instead of working on a deal.
Yeah.
So it is, like you said, different brain muscles.
Do you have a top vacation spot with the family? Is it in the U.S.? Have you traveled abroad? Do you have one that kind of sticks out that you would recommend, of like, if you ever get a chance to go here, you should do it?
So when my children were little, Disney World was a kind of an annual place that we had to go visit. And I've done a little traveling abroad. I loved Italy. I felt like Rome, Florence, that whole region was just, the food was great. It was just a great time.
Yeah. I'm going to have to experience it through some pictures and videos. My parents are going for their 40th wedding anniversary this year, so I'm going to have to eat some pasta through the phone, I think, when they get back. But I'm excited for them. And yeah, I think they're doing like Rome, Florence, and Venice, so that should be fun. Alrighty, as we do with every episode, we got to wrap it up with, you've just offered a half hour of your time, giving our listeners some great advice. What's the best way for them to find you, find the company? How can they reach out and learn more about Matt Reilly and what you guys are doing at Stonecrest?
So, we have a website, stonecrestfinancial.net. We're also, I'm on LinkedIn. I think that's a good way to connect with people talking about networking. So I think if you go to LinkedIn and you put in Matt Reilly, I think you'll find me. I'm known in the industry, asking around.
Nice, Matt. Thank you so much. I appreciate you stopping by the studio today. It's been a great episode. The audience is going to learn a lot, and I think the last thing is go Giants this season, right?
That's right.
We can hope. Our fingers are crossed.
We can hope. We're a little challenged. We're a little challenged at quarterback, but hopefully we just hope to see some improvement this year.
7 wins, 8 wins, maybe. What do you got as a season prediction?
You're probably right. Probably about 8 wins.
Yeah.
I'm hoping for 8 or 9. Just get to that plus 500.
Yeah.
So we'll see how the season goes. I felt like that last year. It was kind of like you get to a point where it's like, okay, let's get a better draft pick.
Right. The Tommy DeVito experience can only last for so long.
There you go.
I digress. Matt, we could talk about the Giants for another hour, but thank you so much for stopping by. We appreciate it. To our uncontested investing listeners, check this video out. Matt brought it today, and we'll see you all in the next one.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.